Yeah, though FVGs also can be used, but I actually work more with the breaker. So for our entry models, we're going to be talking about order blocks, breaker blocks, fair value gap, and the Quasimodo reversal. Those are the four entry model we're going to look at today. So let me share my screen and we start.
Hello, boss.
Yes, I'm hearing you.
Questions regarding the last class.
Okay, can you see my screen?
Yes, boss.
Okay.
Yes, boss.
So someone saying he has a question regarding the last class.
Yeah,
Okay.
not like necessarily regarding the last class was straightforward. Like, we were supposed to ask questions before the Zoom call ended.
Oh,
So that's why.
I didn't see it on my DM. In my DM, sorry.
No, I can ask it here. It's still in your DM though, but I don't know. It's just I don't know whether the chat will still be um visible, like available, because from your chat.
Okay. Yes. After the session, ask me in my DM.
Okay, no
Yeah.
problem, boss.
Okay, so these are basically the four entry models we're going to be looking at. So starting with the first one, the order block. I'm sure we must have heard about order blocks from a friend or different sources. So order blocks are basically areas. They refer to areas, specific areas on a price chart where significant buying or selling activities has occurred. So order block are areas where that signifies what, where buying and selling activities have been. So we have a bullish order block and also a bearish order block. So a bullish order block is in the case of what, a bullish scenario when you're looking for buys and you want to make use of the order blockers in selecting your PUI. So this occurs when we have, let's see this. See now this guy here where we have this break of structure, our order block is always, yeah, it can also be regarded to as the last opposition before a before the main impulsive move, before the swing structure here. So the other block, yeah, the last opposition in this in the bullish scenario, it will be your last bearish candlestick that you mark out to be your other block. And factors we use in considering a valid order block for trading the algo market structure. In trading the algo market structure, your Quasimodo is important. That's one. After having a Quasimodo, having a fair value gap or an imbalance after the impulsive move is also what validates your order block, and of course our structural liquidity as well. So those are things you consider when marking out an order block. Check out for liquidity, imbalance, and a Quasimodo. So this is just basically your algo market structure, having your sweep and break, also your inducement as well. Then you spot your order block to be your buying POI. So, in the case of a bearish scenario, we have a Quasimodo, and the last opposition candle around the zone, protected by what's liquidity. That's your structural liquidity. Is where we mark out to be a bearish order block. So that is actually that. And remember, what makes it valid is always your liquidity and what the imbalance, all within your trading range. So going down to the second one, which is the breaker block. So breaker block actually failed order block. So let's say price came to this zone, and instead of respecting the order block here, we now have a breakout. This block now, our previous order block would be our new breaker block. Breaker block are used for continuation. So let's say price had already mitigated your POI, and you already have, okay, let me make use of this POI. You have a sell POI here. So price came, mitigated this guy. Yeah, this. We have something like this. So this zone here, this is a re-entry for this sell PUI, this particular zone here. Let me zoom in. The zone here is your breaker block, and acronym for that is BP. So we make use of breaker blocks for continuation. So you might ask if you just go ahead selecting random breaker blocks for continuation. No, there are actually a lot of breaker blocks in the chart, but what makes a breaker block valid is when it is established in an existed POI. So let's say you already have this POI and price is reacting to it, and the breaker block is formed. So you can actually make use of the breaker for what your continuation. So for this now, this is a bearish breaker block. And mind you, your liquidity, that's your inducement, is also meant to be present to make your breaker block a valid one after being established in an already existed POI. So breaker blocks are used for basically continuations. They are also used as entry models for POI, though I rarely make use of them for my POI selection, but I just make use of breakers for continuation. Going to the next one, which is the fair value gap, FVG. So let's say all these are candlesticks. So this space here between this candle, between this candle and this candle, the gap here is what we consider to be a fair value gap. These are created due to a market's impulsive move, leaving out unfilled zones which price would later come back to mitigate. It's more like you skipping processes in life and coming back to still do them before another major move would happen. So that is the anatomy behind the fair value gap. I'm coming. Okay, hello guys. Are you hearing me?
Yes, boss.
Yes.
Yes.
Okay. And your fair value gap can also be used for your entries and confirmation entry as well, also for continuations. But I don't actually make use of the guy. I make use of the guy for just a confluence to my zone. Let's say an already existed order block. I just make use of the fair value gap as a confluence. But you can study the guy back test it and see how it plays out if you're picking it to be um your entry model that you'll be using subsequently. So scaling down to the last one. Quasimodo reversal. Okay, so this is actually my most traded entry model. It's also called the reclaim zone. So let's say we have a already existed market structure. And we have a Quasimodo. So this is a sweep and a breaker structure. This zone here to be a structural liquidity. So in the case of a bullish scenario, our order block is the last low created before the sweep, before your Quasimodo. The last low before your sweep is where your QMR is located. So these are actually reclaim zones, a zone where price had already, a zone where price took out, but it's still coming towards to respect or fill the zone. Yeah, so that is actually a Quasimodo reversal. In a bullish scenario, the point where you mark as your sweep, the block there is your Quasimodo reversal. And in a bearish scenario, the last high before the new high created by the Quasimodo is the zone where we'll mark out to be a Quasimodo reversal, a QMR. So in picking out, selecting your QMR, your already said structural liquidity is there. Your QMR is not meant to be below your structural liquidity. That's in a bearish scenario. You can't find your QMR, let's see, around the zone below your structural liquidity. It has to be from your liquidity above. And when selecting an entry model for your POI, point of interest, the most closest POI to your entry model, I mean to your liquidity, is always your most valid POI, because most of the time price might just seek to take out liquidity before giving a reversal at the trading range. So the most closest POI to your liquidity, your structural liquidity, is your most valid POI. So you don't get a misentry in a trade. So with the chart illustration so far, do you have any question before we move on to chart examples of all these entry models?
Boss, good evening. Good evening, everyone.
Yeah, good evening, Raul.
I came in late. I pick up on the breaker block. I did not listen to your explanation on the block. Can you please just vividly give me some explanation?
You go to the recorded video and watch that.
Okay, boss, no problem then.
Yeah.
Boss, please, I have a question on breaker block.
Okay, Chief.
Yeah. So when we want to use a breaker block, how do we where do we set as our stop loss?
Your overall, that's your inducement liquidity. That's where your stop
No.
loss.
Okay.
Yeah.
Okay. Okay. So what how do we know the right breaker block to use? Liquidity Abi?
Yes. And the one existed in and already marked out on POI.
Okay. Okay. Thank you, sir.
Yeah.
Boss, I have a question. So for the breakers, I've seen some charts. It doesn't have must it have inducement? Because sometimes it doesn't have inducement and it still plays out. So must
Okay.
it have inducement? The breaker.
So breaker is
So
without.
can you hear me?
Yeah, I can hear you. So
Yes.
breakouts
I
without
said breaker must.
inducement that plays out, actually breaker blocks that are reacting to a POI, already established POI. But if you're making use of your breaker block as your entry model for your POI, let's say this, it needs to have an inducement for it to be valid in your trading range. So a breaker block without an inducement is the one created here. That's the one without an inducement you can mark out. The one that is reacting to what an already established POI.
Okay.
Yeah.
Boss, please, one more question.
Okay.
What's the difference between QMR and QM?
Okay, so QM is the Quasimodo itself. That's just the sweep and break. This is a Quasimodo. Your Quasimodo reversal is this block here. This previous high before the sweep and break.
Okay.
Yeah.
Then what about QML? I've seen
They're
people like
all
QML.
they're all same thing.
Okay.
Yeah. Just different names attached to it.
All right. Thank you, boss.
Yeah. Okay, so for the chat examples, I'll just send us a new link and we go through them.